So every month you pay rent, you are paying someone else's mortgage. It's not just yours. But there is a way to flip that, a way where two other people pay most of your mortgage, and you still own the building. It is called a house hack. And in Chicago, in the surrounding suburbs, with our 3 flats, it might be the single best answer to the affordability problem nobody is talking about. My name is Eric Hamilton. I'm a Senior Vice President of Mortgage Lending at Rate, and I've been in the business for more than 20 years right here in the Chicagoland area. Today, I'm going to show you exactly how a house hack works with the real math in plain English, like you are hearing it for the first time, because most people are actually hearing it for the first time. What is a house hack? Here it is in just one sentence. You buy a small building with 3 apartments, and you live in one of them. And then you rent out the other 2. And the rent from those 2 apartments pay most, if not all, of your current mortgage. That is it. That is the whole idea. In Chicago, we call these buildings 3 flats. They're everywhere. Logan Square, Avondale, Pilsen, Bridgeport, the south suburbs. The city was built on them. Families have used this exact play for over 100 years. The internet just gave it a new name. Now let me show you the math. These are the example numbers, not a quote of any kind. Your numbers will be different, but the shape of the math is still the same. Let's say you find a 3 flat for $550,000. I know that sounds like a huge number, but just let me walk you through the numbers, so stay with me. Because this building will be your home, you can use an FHA loan. And an FHA loan only asks for a down payment of 3.5% down. 3.5% down of $550,000 is $19,250. Not $110,000, not 20%, $19,250. That is less than many people put down on a condo. Now, the monthly payment on a loan like this, the full monthly payment could be around $4,650. That includes the loan, the property taxes, the insurance, and the mortgage insurance, everything. $4,650 a month sounds impossible on your own. You are right, it would be, but you are not paying it on your own. Let's say each apartment in the building rents for about $2,100 a month. You have 2 tenants, together they pay you $4,200 every month. So you take that $4,650 minus the $4,200 is $450 left over. Your share of the housing payment is about $450 a month. Think about what a 1-bedroom apartment rents for in this city. Now look at that number again, $450, and you are not renting. You own a $550,000 building. You are building equity in all 3 units. Every payment, your tenants are helping you buy an asset that is yours. That is the house hack. The renter pays and owns nothing. The house hacker gets paid and owns everything. Now let me explain how the loan actually works, because this is where I can help you the most. The loan is called an FHA loan. It is a normal home loan backed by the government, built for regular buyers, not for the rich, not for investors, for people buying a home to live in. 3 things make it a perfect loan for a house hack. First, the down payment is 3.5%. Even on a 3-unit building, most people think a building this size needs a giant down payment. It does not. Second, the loan limits are bigger for bigger buildings. In 2026, the FHA loan limit for a 3-unit property in Chicago in the suburbs is way more than what people are expecting. That covers a lot of real buildings in this market. Third, and this is the part that changes everything, the lender can count the rent towards your income. We use 75% of the market rent from the units you rent out to help you qualify. So the building helps you get approved for the building. You do not need a giant salary. The property carries part of the weight. Now, here's the part that the internet leaves out. And this is why you want a lender who tells you the truth before you fall in love with a building. For a 3-unit or 4-unit building, FHA has a special rule called self-sufficiency test. It sounds complicated. It is not. Here's the plain version. Take the market rent for all 3 units, even the one you live in. Add them up. Take 75% of that number. That 75% has to be at least as big as the full monthly payment. In our example, 3 units at $2,100 is $6,300. 75% of $6,300 is $4,725. The payment was $4,650. So this building passes. Why does FHA do this? They want proof the building can stand on its own 2 feet. Honestly, so should you. If a building fails this test, the math was probably too thin anyway. The test protects you. One more rule. For a 3-unit, you need about 3 months of payments saved in the bank after closing. In our example, that is roughly $14,000. And that money cannot be a gift. It has to be your money. So the real cash to play this game is the down payment, the closing cost, and the reserves. It is more than $19,250 all in, but is a fraction of what people assume a $550,000 building requires. Let me also be straight with you about the rest. You will be a landlord. Tenants will call you. Things will break. Chicago 3 flats are often 100 years old. Old boilers, old roofs. You have to budget for these repairs or the math stops working. You also have to actually live there. FHA requires this to be your primary home, and you need to stay for at least the first year. This is not a trick to buy a rental. It is a way to buy your home and make it affordable. And the rents have to be real, not hopeful numbers. An FHA appraiser sets the market rents, not your imagination. That is another reason to run the numbers with a lender before you write an offer, not after. So who is this for? It is for the renter who is tired of paying someone else's mortgage. The first-time buyer who looked at prices and rates and felt the door close. The person willing to trade a little comfort now for a lot of freedom later. Because here is the long game. You live there for 1 year or more, then one day you can move out, rent your unit that you lived in, and now the building pays for itself while you buy your next home. That is how ordinary people in the city have built wealth for generations, one building at a time. You don't need to be rich to start. You need the right building, the right numbers, and someone who will run the test before you make the offer. That is what I do. If you want to know what a house hack looks like with your income and your savings, the first step is getting a pre-approval. The link is in the description. It takes a few minutes and it will tell you exactly where you stand. If you know someone stuck renting who needs to hear this, share this video with them. It might change the next 10 years of their life. And drop a comment. Tell me about your biggest questions that you have about buying a 3 flat. I read every single one. I'll see you on the next video.